Tuesday, May 18th, 2021, Monaco 64, home of alternative economics and contrarian views. So today we're going to look at how you could earn almost 3% on a gold investment. It wouldn't be physical gold, of course. We're going to look at that. I think it's a very good opportunity. Before I start though, and then look at the markets, just wanted to say a few things. First, I highly recommend, if you're into silver, that you go to Wall Street Silver Reddit group. It's growing. It's one of the big forces behind the silver squeeze movement. I think it's working. I think the general public, us small investors, stackers, so to speak, silver bugs, silver apes, whatever you want to call us, are making a difference. We are draining the bankers of their physical silver, and we've seen proof of that lately when the LBMA had to correct a reporting error of 106 million ounces of silver. So they reported that they had 106 million ounces of silver that they didn't have, and they did it for over a month. So we need to keep going. Go to their Reddit group. If you're on Reddit, join them, Wall Street Silver. They've got a YouTube channel as well, Wall Street Silver YouTube channel. I'm going to be interviewing with them on the 25th of May with Jim and Ivan. So I'm looking forward to that interview. It will probably be coming out on the same day or the day after, I'm not sure. Today, of course, as well, I'm going to be interviewing Lynette Zhang later on tonight, London time. If you have any questions you want to ask her, write it down in the comment section of this video. I already have some questions that I've written down for her. I'm going to think of more questions as well. I think it will be a nice chat with Lynette Zhang of ITM Trading. What else? One more thing before we go into the almost 3% return on gold opportunity. And of course, this is not investment advice that I'm going to give you. I saw an interesting headline because I enjoyed the movie The Big Short. I've watched it several times. I think it's a very interesting film to watch if you're interested in markets, in economics, investing. I think it's a must watch, The Big Short. I think it's a lot better than Margin Call. I've watched Margin Call a few times. I watched it recently. It feels like there's an hour of it missing, really. There's a lot of details that they don't go into, and The Big Short is much better. So we saw news yesterday that Michael Burry, the main character in The Big Short, the guy who was laughed at by Goldman Sachs and other investment banks because he wanted to bet on the collapse of the housing market, and made a fortune, of course, after that. And of course, Goldman Sachs and the banks who laughed at him had to be bailed out by us, the taxpayer, unfortunately. But now he's saying that he's shorting. There's a revelation through the 13F filings that he's massively short Tesla, and he's got a huge bet on inflation, or rising prices, as I like to call it. He's positioned for rising prices or inflation, and he's got, I think, a $530 million bet on Tesla going down, and he's got a series of puts and call positions that are net short on the bond market, on the Treasury market specifically. So when Treasury prices go down or bond prices go down, yields go up. That means that investors want a higher return because they think prices are going to be rising quickly in the economy. So that's what he's betting on. I think a few months ago, he tweeted about hyperinflation, that we're going to get hyperinflation in the US. And apparently he had some FBI agents knock on his door. He called it the paradigm shift. And then he deleted all his tweets about that, about hyperinflation, even though It is known that he likes to delete a lot of his tweets. He doesn't keep them up for that long. So I thought that was interesting that Michael Burry of Big Short fame is short treasuries. He's also short, of course, Tesla. So now to the investment opportunity of getting almost 3% income on a gold investment. Of course, it's not directly physical gold. I personally like physical gold. I've got more physical gold and silver than I have equities, miners. But we all have different circumstances. We have different demographics. Some people are younger, some people are older, some people are coming up to retirement. So I think personally this is a good opportunity, probably for people who are going into retirement or are retired and like gold, but don't like the fact that we don't have a dividend when we hold a gold coin or a silver coin. We're not big enough to lease our gold, right, on the LBMA, which is actually something I wouldn't do. I don't recommend that. LBMA, don't trust that group of individuals or institutions. So it's very simple. It's buying shares of Newmont Corporation. So what is Newmont Corporation? Well, some people say I shouldn't use Wikipedia, but in this case, I don't think it's a problem using Wikipedia. This is just about a corporation. It says Newmont Corporation, based in Greenwood Village, Colorado, United States, is the world's largest gold mining company, incorporated in 1921, so 100 years old. It has ownership of gold mines in Nevada, Colorado, Ontario, Quebec, Mexico, the Dominican Republic, Australia, Ghana, Argentina, Peru, and Suriname. In addition to gold, Newmont mines copper, silver, zinc, and lead. So they do a little bit of the other metals as well. So Newmont has approximately 31,600 employees and contractors worldwide, and is the only gold company in the Standard & Poor's 500. So that's another reason I think to get into Newmont, or I personally have some shares of Newmont. I'd like to have a lot more, of course. I added some yesterday because the technical picture looks very good. We've made an all-time high. I wish I had bought it a lot earlier. I did buy it significantly lower than where we are right now. But as you can see by this chart, we've made an all-time high, and it looks like a massive teacup formation, and we're breaking out of the top of the teacup. And the fact that it's in the Standard & Poor's 500 index, it will make it attractive for big institutions, big institutional investors to have exposure to this company because it has exposure to gold. And I think the fundamentals, of course, are very good for precious metals, and it's going to do well. What about the junior miners and explorers? Yeah, that's a different kind of investment, I think. That would be more for younger people, because I think Newmont, what they're going to do, they're going to use a lot of their earnings, retained earnings and reserves of cash that they have to buy the small mining companies that find gold. That's what Newmont does. It swallows the small companies. So for younger people, maybe Newmont is not that interesting. The junior miners are more interesting. You could see 10, 20, 30, 50, even 100 baggers in the junior miners. Do I think Newmont will be a 100 bagger? Probably not. Maybe a 5 or 10 bagger, depending on what the price of gold does. And right now, the dividend yield for Newmont is 2.97%. It might be a little less or a little more, I'm not too sure, but it's very close to 3%. And I think it's a good place to park some of your wealth. If you're a gold bug, if you believe in gold, or even if you don't, if you think it's a good place to be and you get a dividend. I mean, looking at the Treasury yields right now, you don't even get 2.5% for a 30-year bond. So you're getting more for owning the biggest gold mining company in the world that has been around for 100 years than you're getting from the US Treasury. And the underlying product that this company produces, of course, is gold. And it has a few other metals like silver and the base metals as well. So I think it's interesting. Did I buy some yesterday because I think it's going to go higher? Partly it looks positive. Technically, it could come back, of course, to retest the breakout. But the fact that we're at an all-time high in newmont and gold and silver are just starting to pick up is very encouraging. I think gold and silver will continue higher, of course. Yes, not in a straight line. We're going to see lots of ups and downs. But if you can lock in almost 3% income from the biggest gold mining company in the world, I think it's a good, interesting investment. So with that, let's look at where the markets are this morning. So it's 8:27 a.m. London time. We've got spot gold at 1870. It's up about $3. The high has been 1874 and the low 1864. So we are up slightly here. Spot silver. Silver is doing well this morning. It's up 37 cents, up 1.3%. So vastly outperforming gold this morning, which is encouraging. As I've said many times before over the years, in a precious metals bull market, silver leads the way, tends to outperform. So this is a good sign. So we are off the highs. The high overnight has been 28.77. Right now we're at 28.53 or thereabouts. The low has been 28.11. Yeah, we broke out of the top of the pennant. So right now, I think we could be at 30 very soon. As I said yesterday, 29 could be some resistance, and it's going to be choppy. That's for sure. We could go back to 27.50 very easily and then come back up. That's how silver works. The stock market, the Dow's up 122 points, 1/3%. NASDAQ is up almost 1%. NASDAQ 100 future. S&P is up 0.4%. The currencies this morning, I've noticed that the dollar is fairly weak this morning. The dollar index, as you can see here, is continuing lower. This is a long-term 20-year chart. The key level next will be 89.20. Right now we're at 89.90, down about 1/3 the dollar index. And after that, the low from February 2018, just above 88 at 88.25. That will really be a key support there. And as per gold and the dollar index, yes, they are inversely related in the short term, but I just wanted to show you this. Back in 2008 in March, when gold made an all-time high just above $1,000, the dollar made a low on the dollar index just about above 70. And 13 years later, the dollar index has gone up from around 70 to just under 90. So the dollar index is done quite well, but gold as well is up. It's up from 1,000 to almost 1,900. So what does that mean? Well, that means that despite the fact that I do expect the dollar to weaken versus other fiat currencies, the other fiat currencies are going to do just as bad as the dollar versus real money or gold over the long term. So just wanted to show you that. So yeah, Versus the individual fiat currencies, the pound's very strong, up 0.4%, just below 142 versus the dollar. The euro's up 0.4 as well, just below 122 versus the dollar. The dollar's down 0.25% versus the yen at 108.98. And the dollar's down 0.25 versus the Chinese yuan at 642.60. High-grade copper, quite strong as well. Commodities continue to do well. It's up 1% at 476. WTI crude is almost up to 67 now, up 1%. So yeah, it looks like commodities had a little bit of a rest late last week and earlier this week, yesterday, and now they're picking back up again. I saw soybean oil is doing very well, made an all-time high yesterday. So it's not just like one particular commodity that is doing well. It's the whole range of commodities. So to finish off, let's quickly look at the 10-year yield. Bond market still seems pretty calm right now. The yield is at 165. It's unchanged overnight, up about 2 basis points, I think, since I spoke last yesterday. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.